Recording. It is 4:06 and this is the West Linn Audit Committee meeting. It is October 9th. And I'll go around the room and everyone can just introduce themselves. I'm Lauren Breithaupt. I'm the Finance Director.
Leo Groner, City Council.
Christy has Senior Accountant.
Rory Bielostowski, Mayor. John Williams, City Manager.
Abby Farber, member of the Audit Committee.
Tanya Moffett, Auditor.
Okay.
With Marine and Company.
And we're here to discuss this, the audit kickoff meeting. So we haven't finished our audit yet for this year. We actually just started our final field work today. Tanya's team was out and they'll be out for pretty much the rest of this week. And some things about this year, we have a couple different things. This year, we're going to be doing a single audit, which is probably our biggest change, and that's for the audit of federal grants, federal awards. And so we had ARPA money that we received during the year and started spending during the year. And then more significantly, we had our FEMA money that we received from our 2021 ice storm. And so we are going to be having an audit on both of those programs. Likely we'll probably still have some ARPA funding to do next year too, and maybe even the following year, but we'll be working with Tanya on that. I'll turn it over to Tanya shortly, but there's a couple new pronouncements. I just feel like we have a lot going on this year, a lot of new things. We have the opioid revenues that we've been receiving. That's a new, the settlement monies from those. So that's kind of a new liability or potential liability or restriction that we're going to be seeing. Restriction.
When did you receive the funds?
We started receiving them this year. So and then we have to figure out if we're going to.
Yeah, so some of it'll be deferred.
Yeah. And then a few other like minor things. We the McLean House, the Friends of the McLean House dissolved this last fiscal year, and they gave us the money, the city money to spend on the McLean House, sort of like a grant. So they turned the funding over for that. So we have that money that we already started spending some of it. A little bit new that's new this year, and some other little. We have a few years ago, we implemented the lease subscriptions or the lease accounting standard GASB 87. And this year we are doing.
Do you want to explain what that is?
Yes. So GASB 87 is a standard that came out a few years ago that basically says for leases, it's a new way of presenting leases on your financial statements.
Okay.
And basically, one of the weird things about it is when you at the inception of the lease, you have to record it as a revenue and a capital outlay for the whole entire amount of the lease. And then, so it nets out to zero as a revenue and an expense. And then over the time of the lease, you book the leases as debt service. So debt service payments for the lease payments. And then basically they just came out with a new GASB 96, which is for IT-based subscriptions. And it's the same concept as 87, but for IT-based subscriptions. And so we are actually just starting to get a hold on that and trying to figure that out. We hired a company this year, Book, that a lot of other municipalities work with, that is basically just a software that you put your subscriptions and your leases into the software, and then it gives you our financial notes and what journal entries we have to make. So it's a little bit easier to do the work. Not a ton easier in the first year, as Misty and I are finding out, because it's a lot of work on the front end of things. But I think going forward, it's going to make a big difference in our time and the tracking.
Especially if there's any changes to those agreements, like length of time or dollar amounts increase and stuff. It's really easy with that books to just go in and change it, and then it will automatically update everything for you. So yeah, it's a lot of time up front. But
Other than that, interim went really well. We don't have any major concerns. Yeah,
we don't either.
yeah. And then I'll let Tanya speak about anything else, and then I'll turn it over to you all to ask questions.
Yeah, so the audit's going well. obviously it's the first day of field work for final field work, but we've already been out here for interim and started our audit prep. So our audit is a risk-based audit. So we go in and look at like where are the highest risk areas for the city, and those change year after year. What potentially, obviously there's certain areas that are always going to be a high risk, like cash. So anytime that you have a location that's taking in cash, that's obviously going to be a high risk. It may be a small dollar amount, but it's still going to be high risk. So every year we're going to look at cash. But there's other areas that we kind of do based off of, we go in and we review the minutes from the city council meetings. We look at like articles in the paper, things like that. We talk to management and personnel to determine if there's any areas that anybody's concerned about, if there's been significant turnover or changes, if there's maybe gaps in internal controls, we'll go look at that. So the things that are there to safeguard and make sure that things don't happen, we'll go look at that. So we've already done all of our planning and that risk assessment. And now we have our audit plan. So we're here and we're doing and implementing that audit plan. Obviously, if there was anything that you guys were concerned about, we can talk about it. And leave it a little bit, but
Yeah, other than cash, are you doing any other physical audits, supplies, equipment, anything like that?
so there's different pieces that we do. So we audit capital assets. So that is significant assets over a certain dollar amount. This year, because of the implementation for the subscription-based information technologies, the things that Lauren was talking about for 96, that's the highest risk area in assets. Like capital assets is what it's called, but because it's new. So making sure that those got implemented correctly. Any significant large assets we'll go take a look at. We'll look at invoices, things like that. So we have certain areas that we look at. I can't tell you specifically which ones we're looking at because I am not in the weeds that much, let's be honest. I can figure it out if you want to know. But we will be focusing on the subscription-based leases because it's a new pronouncement to make sure that it gets on the books correctly in this first year of implementation, because that's high risk because it's new to everybody. So that's kind of how we do our assessment for what areas we're going to focus on and spend more time. Does that kind of answer the question? Yeah. I mean, there's obviously things that I've already seen in the city because I'm around here quite a bit. Like my doctors are over here. And so I spend a lot of time in West Linn because our office used to be located in West Linn. So almost all of my doctors and my family's doctors are in West Linn, even though I don't live here. So I come out here a lot. And they love it because I stop by and just check on them and just all the time. I randomly stop by and just say, hey, how's it going? To check. Just to make sure that we're aware of what's going on. I do a couple of things, to be honest, just to make sure that we're aware of what's going on within the city, and to make sure that when we are setting up and determining what we're going to be looking at, that we have the full picture as best as we can. Also the single audit this year. So what happens is currently the threshold is anytime that the city spends over $750,000 of federal expenditures during the year. It's a little bit weird with the FEMA money because of the fact that the ice storm was in 2021 or 2021 was January 2021, right? So it's a little bit weird because like you guys spent the money for the repairs and things back then, but the FEMA came out a couple of years ago and changed the way that you put that on the schedule of expenditures of federal works based off of when you get the grant agreement, because unfortunately you don't know how much you're going to get reimbursed for. So you spend the money up front and then FEMA will reimburse you for portions of it. You don't always know if they're going to reimburse you for everything.
So in the audit schedule, do you have to go back to that period to when it's eligible and restate that? Or
No.
the audit? How does it work?
No, because the grant agreement isn't signed and finalized until later on.
Yeah.
And so it's a little bit weird because we always focus on the expenditures. So whenever the city spends the money, but it's a little bit different with FEMA, that they approach it a little bit differently, where it has more to do with the agreement and you get the revenue on the FEMA side versus like the expenditure side necessarily.
So
it's one of the only ones.
It's so weird. And so in terms of that, are you pulling expenses from this fiscal year to
No, so
Are
they
there any
are.
expenses to
so-
show?
so What you do is you look back at the expenses that they're asking to get reimbursed for that were spent back in 2021, 2022,
Mhm.
to do any of those repairs.
Does it make our revenue statement then look really inflated
No,
this year?
because the schedule of expenditures of federal awards is a standalone statement, and so it's only for the single audit.
So it's not going to show up on a P and L then?
No,
No, we recorded all those expenditures when they
Back
happen,
then.
and then we record the revenues when we get them. And so usually there's this matching component, but we don't have that matching component with FEMA because sometimes with FEMA, it's years later.
Wow.
Because
Wow.
it just
And
takes
you
a
couldn't
long time
Book it
to.
back then either as a receivable that.
No, we don't know.
I don't know how much it's gonna be. So like, we worked with it was a port authority, and they had, railroad tracks, and they kept getting taken out every winter. And so eventually FEMA's like, we're not replacing the railroad tracks and you're not. So now they're rails to trails. But it literally took about 15, almost 16 years to get it all figured out, how much they were gonna actually give them. And they had booked a receivable because back then it was treated differently. It's only been in the last couple of years that they're changing the way that you treat it on the CEPA. And so we had this huge reconciling item that was never real, but nobody knew, right? Because they thought they were gonna get the rails replaced and get it all dug out like they had every other year in the past. So they booked kind of that approximate cost on their CEPA, had it as a receivable, but then it never came to fruition even 16 years later. I mean, a portion of it did, but not nearly as much. And so they had this big write-off. And so that's what they're trying to eliminate from happening, is having people, like, entities claim that full amount and then potentially not get it all back. So that decision makers are not making decisions on their budget based off of potentially having this revenue that they may or may not have. So they recently just changed it. So getting it this quickly is actually pretty fast for some things. I mean, the fires, they're still getting money from the federal fires down in the
Save on
Gates,
Ashland.
yeah,
where those
all the,
roads.
that whole area.
We do have
So-
we have one more project that we're waiting for our revenue from it. We had to submit by June 30 of the year. We did. But they're just really behind on giving, and it's not a huge significant amount. I think it's around 80,000. So I mean, a large amount, but not
Yeah,
in the grand scheme of
millions.
the 2 million that we're getting. And then in addition, FEMA changed their allocation in October of 22. That's when we applied for it. They were giving 75% reimbursement, and now they changed it to 90%. So there were a few projects where we got the 75% and we applied for the extra 15% back in last October. We still haven't actually gotten that at 15%. And it's minor in the grand scheme of things, but those both will be receivables until we're going to work with Tanya on how we're showing those. So hopefully we don't have it on next year's CEPA too, because that just, makes it
The ARPA money is usable for another year?
a few years.
2026.
Good.
And we have that all scheduled. Basically, it's all like allocated, spent. Another thing that I'm gonna have to work with Tanya and her team on is that, so basically, we got the money, some last year and some the year before, half and half. And last year we started spending the money on certain things, but then we're doing what's called a revenue replacement for it. So basically, if you got less than $10 million in ARPA funds, you can count the funds as revenue replacement. You don't have to tie it directly to.
You can supplant essentially.
You don't have to tie it directly to an expenditure. However, like, we kind of have things that are like, we're allocating it to things, even though we're calling it revenue replacement of all of it. And so we did spend some of it last year, and then we have it like earmarked for this year and next year. Or this fiscal year 24, and then fiscal year 25. So we'll have expenditures for the CEPA purposes in all 3 years. Well, maybe not. Okay, hopefully not.
No, so You won't, and
We can,
we
report-
can,
yeah.
we can talk about that. It's
Okay.
one of the weird rules about it is because you're gonna do the revenue replacement, you'll just put it all on this year's CFA. And then you can still, you're basically washing it as its federal designations. So when you spend it on those projects, it's not still federal funds anymore because you've already washed it with the revenue replacement. So this came out from ICMA, so the City Managers Association. So there was with the deficit that was happening at the federal level, one legislature basically made a comment of, well, maybe we'll just take back the ARPA funds that haven't been spent yet.
Oh, I saw that.
And so what it did is then it put everybody in a panic that if you hadn't spent the funds, so then everybody that could kind of went the revenue loss route and was like, nope, we used it. So everybody pretty much went the route of like, we're just gonna say it was lost revenue because then we've spent it and then they can't drop back. They kind of stopped with that, but that was like, and it was right around the time of reporting period. So the report had to be done by the end of April, and this happened like April 20th. So people were like, do we need to, like, people had already done their reports, like, do we have to redo them? And so there was a big like going back and forth on that piece of it. So one thing to note is that right now the level is 750,000. There is a proposed, it came out last week. I don't know if you've seen this yet. So there is a proposal to increase the CFA amount to $1 million and then increase some of the like question costs when you have to report if there's something wrong up to, I think, 30,000. I haven't had a lot of time to look at it yet, and I don't know when that would be implemented. I know that you have until like December to respond back to it. I'm sure our firm will be responding back, but yeah, with inflation and stuff, we should probably increase the threshold to 1 million now.
Yeah.
Which might make it so that the city doesn't have single audits as often, because it kind of seems like you guys are hit or miss, like when you have them or not.
We've only had one since the time that I've been here with the Cedar Oak
Which was
program. So that was, I think, 2018 or so, maybe fiscal year 18 or 19.
So
So,
it's timing because it's expenditure based, not
Mhm.
revenue
Yeah.
based. So it doesn't, and it's your fiscal year, not the federal fiscal year.
yeah. And things like these FEMA grants and even ARPA make it really confusing and really like nothing really lines up and it's not really reasonable to think that. But anyways,
They're normal things. So, so the audit's going well. Don't have any concerns at this point. We will be out here for the next couple weeks. My team and I'll be out here some. I'm going to Texas, so I'm not going to be around, but they can call me. So, but yeah. Do you guys have any questions? Yes.
A few, not huge ones. I know that there is at least one court case going on. It's all about Oppenlander Fields, and who knows what's going to happen with that. Does that have any bearing on the audit and looking at risk and everything else?
So anytime that there are litigation claims, we talk to legal counsel and get legal counsel's professional opinion because we are not in a position to be able to say what's going to happen with those cases. So it depends on where cases are at and how likely they are going to be handled, if they're going to be handled by insurance. All sorts of different pieces go into whether or not that gets reported in the.
I think I had one other and it's like gone from my
If
head.
you think of it later on, you can always ask.
Not a big, it obviously wasn't something burning, so.
and I think everyone has Tanya's email and phone number. But of course, at any point during the year, we encourage you to reach out if you have questions. Of course, you can talk to myself, John, Misty, and ask those questions too. But we want to be as transparent as possible and make sure that all your questions are answered And of course, if you ever have any concerns, please do reach out to Tanya. I know that we record these meetings now. We used to leave the room towards the end of them. And then we were told that we had to record these meetings and put them on the website. So it really doesn't make a lot of sense for us to leave the meeting to have you ask private questions that are going to be up on the website in a day. But if you do have any questions, Tanya is available for those. And anything else?
The only other thing I can think of related to federal grants is I heard that they might increase the automatic indirect
Yeah,
from
it might.
20% to maybe 15.
So the indirect currently, the de minimis indirect rate is at 10%.
Right.
And so that is one of the proposed changes to increase it to 15% in that same legislation change that I just was talking about. So we have until December to make a comment about it. So the nice thing is that they're recognizing that administering these federal grants takes a lot of time and effort, because before, a lot of the federal agencies or even pass-through entities like the state wouldn't allow for indirect costs. Like, you know, obviously you spend time on federal grants, you spend time on federal grants, you spend time on federal grants. And so they now allow for an indirect, de minimis indirect cost rate. And so you used to have to go and like negotiate it with a federal cognizant agency. And a lot of times when they were negotiated rates, they were super low. And so now you don't have to go through that process.
Nice.
So, yeah, so hopefully that will be increased too. Again, I'm not sure when that would be implemented because they have to go through their process. So.
Yeah, Nonprofit Association of Oregon that I belong to had published that, and I thought, ooh, that's good.
Are there any other questions? I know that counselors have an exec session to get to in a few minutes, so.
Questions? Just 5 minutes for the audit.
Me too.
And it's fine like
And I saw you won the award again.
Yes, yes, we did.
Congratulations.
Thank you. Oh, yeah. Take a look at that again this
With
year.
regard to Oppenheimer, it's, in court still, where it's not covered by insurance, unfortunately, so hoping to settle the case, of course, but so there is some risk involved in that.
Of course.
Attorney fee clause.
Yeah.
So best possible would be a settlement.
Settlement, we prevail or whatever.
Yes.
Settle or city prevails, but
Yes.
Is there any reserve being set up for a possible settlement?
I think so.
No.
That might be I don't know what our next meeting is about. That could be it, so
Okay.
maybe you'll get past that in the next meeting.
All right.
Is the influx of federal, I know it's an audit committee, not a bottom line or budget committee, but just out of curiosity, is there, with the influx of the federal funds, the ARPA and, all that came through, is that having a benefit on our bottom line at all?
I mean, I think that, of course, the ARPA really helped us. I think it kept us out of the whole last biennium completely. Because those funds are not really continuing, they're a one-time thing. It really just helps us for a point in time. And then, going forward, we're still going to have our challenges. And we're having a revenue discussion in a few weeks here to kind of talk about potential revenue sources and next Tuesday. So yeah, just a bunch of different things to think about still. And yes, fortunately we got those funds, but, and then for the FEMA funding, that was all basically reimbursement for the money that we didn't expect to spend. So yes, it is nice to have that extra money coming in for, we do have some sorts of some minor allocations for ice storms and things like that. But this obviously was way larger than what we had expected. And, even with the 90%, we're still missing that 10%. So, it's really not helping us. It's just recovering from what we lost. Okay, thank you all.
To get these guys downstairs.
Okay, I'm going to adjourn the meeting. Thank you all.